We are really honored to have Dr. Hasmukh Hadia with us today, Secretary, Financial Services Department, Government of India, come and speak to us about the financial sector reforms that government has been introducing in the last 1 year. It's really an honor to have somebody at the helm of affairs drafting these very measures come and talk to us about the objectives and the rationale behind these very measures. It's a matter of great pride for Indian Institute of Management to have Dr. Hasmukh Hadia here, who is also our alumni. Dr. Hasmukh Hadia, we will welcome you back to the campus. We are really privileged to have you come and speak to us, our students, and interact with our faculty and tell us about the financial sector reforms. The government has been introducing lots of financial sector reforms in the last 1 year. It's an unprecedented pace at which they have gone. Three measures come straight into the memory. One is the Jan Dhan Yojana, which was announced almost 9 to 10 months back and was a runaway success. And then we had the Mudra Bank, which was also very interesting exercise. And just recently, the government has announced the social security measures. We are privileged to have you here, and we would like to take this opportunity to learn from you what was the rationale and objectives behind these measures. To start with, we would like to ask you and seek your opinion about the financial inclusion and the Jan Dhan Yojana as to what were the reasons the government took such strong measures for the success of this program.
Well, when you are talking about financial inclusion, there are three things which come to mind. And for each one of these three things, the government has put in place some kind of a mechanism to address that. The first issue is banking the unbanked. In this country, after so many years of independence, there were so many people who were left out in terms of opening a bank account. They did not have access to the bank credit or bank finance, or they did not have access to bank even for depositing their money. Why? Because of the strict KYC norms. So one of the objective of Jan Dhan scheme was that let us have at least one account per family opened. And for that purpose, we put in place the entire thing in a mission mode. RBI relaxed the KYC norm for opening a no-frill account, basic account, what we call no-frill account. And I'm glad that because of the sustained mission mode campaign and because of cooperation of all the banks, we could open 16 crore new bank accounts, which is a record in itself. Today, we are reasonably sure that at least more than 90% families have at least one person having a bank account. Now, the reason why we need to open a bank account for them is, number one, to make them get into the habit of saving. Number two, if the government is really thinking of transferring money directly into their accounts, what is called direct benefit transfer program, then also we need infrastructure, financial infrastructure for that. We need bank accounts of each one. That is the second reason why we are doing it. And third is that in this country, a poor person doesn't have income tax record. He doesn't file any other reports to any government department. He is not paying any tax also mostly. So he has no record built up in case if he wants to do some business and take some credit from the bank. He has no record to show to the bank that no, I am earning some money, I am saving some money, and I am eligible to get a loan. So the entire idea of having an account is that if the person is able to deposit some money in his account, build some history of transactions in his account, then we should make him eligible for drawing some credit also from that account. So Jan Dhan account is also linked to some kind of a 5,000 rupees overdraft facility. And I'm glad to inform you that already about 70,000-80,000 people have got overdraft facility. And we have told the banks can now, based on the history, if the person becomes eligible for overdraft, please send him an SMS or a letter. Tell him that you are eligible to get overdraft now. If you want to draw overdraft, please come to our branch and do the documentation, and he can start drawing overdraft. Now, this was the purpose of Jan Dhan, and mostly it has been achieved. The other two purpose of financial inclusion is One is banking the unbanked, served with Jandan. Second is funding the unfunded. People want to do small business, small thela walas, small auto walas, barber, sabji wala. They don't have any source of formal funding. They are mostly dependent on money lender for all their requirements. So the idea of Mudra Bank is funding the unfunded, and I'll talk more about it later. And the third thing is that even today, not more than 20% people have got some kind of an insurance or the other. Now, insurance is more a requirement for a poor family than a rich family, because a person has barely come above the poverty line, suddenly some illness in the family, and the person dies, the earning member of the family dies, the entire family comes again below the poverty line. It's a very tragic thing that is happening in this country. If only we have a way of supporting such casualties which are happening in the society. So the two insurance schemes, they take care of the insurance, one life insurance, one accidental death insurance. To think of a scheme of giving a 2 lakh rupee of accidental death insurance to anybody for a sum of only 12 rupees per annum, 1 rupee per month, it is a revolutionary scheme. And again, the scheme is linked to bank account. So we are saying that we are not going to accept your 12 rupees by cash. If you want to participate in the scheme, please go and deposit 12 rupees in your bank account. So he will learn to transact with the bank also by that method. And 12 rupees is not a big sum for government also. But the way the scheme is designed is that he has to know that I have paid 12 rupees, I have filled up a form, and there is an insurance in my name. So his family also comes to know that yes, there is an insurance in his name. Most of the group insurance schemes have failed because the claim ratio is so low. While here, because the person has made an attempt to take an insurance, he would probably remember that no, I want to claim it. And we are doing a lot of publicity about how to make claims also under the scheme. And so we do hope that the claim ratio under the new scheme will be very good, and the people, the poorest, will really be benefited by this scheme. One more aspect of social security scheme is pension. In India today, only 11% of the population is covered by some form of insurance, some form of pension cover. It may be government scheme or it may be EPFO scheme. Now, how do we cover the rest of them? The informal sector people, the farmers, the laborers, how do we cover rest of them in pension? So that's why we have come out with the new scheme of Atal Pension Yojana. So this entire reform which is done in the financial sector comprehensively covers the case of banking the unbanked, funding the unfunded, and the social security cover of insurance and pension for all families in the country.
I think this is really good explaining the rationale to us. But some of my students and some of the reviews that I read in the newspapers and journals tell me that the new Jandhan accounts, of course it's revolutionary and we must congratulate you for opening 16 crore accounts in such a short time. I have myself been studying this phenomena right from 1955 when we nationalized the State Bank of India. Our objective was Jandhan or financial inclusion. It never happened. It was a tragedy that almost till 2014 actually, hardly 50% of the households had a bank account. So I fully agree and appreciate the efforts that have been done. But I have been reading in the paper that some of these accounts are not operational. And some of the critiques have been saying that these accounts have come before people really needed those. So would you agree with that criticism, or the other way of looking at it is, what would be the government doing so that almost all these accounts are operational and they become commercially viable for the banks?
Very good question. When the Jandhan scheme started, we started with 80% of the accounts remaining zero balance. It went down over a period, zero balance accounts came down to 75, 65, 60, and today I am happy to tell you that only 52% of the accounts are zero balance. The rest 48% accounts have got some balance in them. Now this is the situation even before the entire DBT scheme, direct benefit transfer scheme, has still not been fully implemented. We have done DBT in LPG, but most of the LPG customers are urban based. The moment we do LPG for kerosene, the moment we do some kind of an LPG for fair price of, for example, some kind of a public distribution, in lieu of public distribution, if we have a kind of a direct benefit transfer scheme, each and every one's account will have some balance. Also the insurance schemes which you have introduced, it is only through bank account. So if a poor person wants to take an insurance of 12 rupees, he has to come through this. So far 10 crore people have enrolled for the two insurance schemes, Jeevan Jyoti Bima Yojana and Suraksha Bima Yojana. But I am not too sure how many of the 16 crore Jan Dhan account people are there in this 10 crore. We are trying to cover them in a targeted manner. We are trying to approach them and tell them that you also please join in this scheme. And we still have 2 more months to go. The scheme is open up to 31st of August. So the same insurance can be taken up to 31st of August by people. And this is an auto renewal kind of an insurance scheme. Every year automatically the insurance premium will be deducted from the account of a person. So we are encouraging people to straight away put, instead of 12 rupees, 50 rupees, so that even if they forget for the next 4 years, the insurance does not lapse. The bank will automatically debit his account by 12 rupees and he will continue to get the security cover. So we do hope that by August end, we would have very few accounts which are left with zero balance. This would definitely automatically be having some kind of a balance. And still we have not really started the financial literacy campaign in a big way. We need to do that, I agree. And so with lot of push given to financial literacy also, the banking transactions in this new accounts will improve.
Thank you so much for clarifying, and I think then the banks will not complain that this Jan Dhan programs are not commercially viable. Once they have accounts sitting in the balance, they will be able to earn some interest on it. There has been also one more thought, and critics have been saying that the insurance schemes that have been started, they did exist in some form or the other, and they were just repackaged. Would you have something to share on that too?
Well, let me tell you that yes, in India we have lot of group insurance schemes. Every state government, even the central government has insured some group of people for some kind of an insurance. So for example, in Gujarat, there is a scheme for covering each and every student under accidental death insurance, group scheme. So any student who dies in an accident, 50,000 cover is taken by the government. The premium is paid by the government. Similarly, for fishermen, for farmers, for unorganized laborers, there are some schemes which are group insurance schemes taken by various state governments. But the experience there was that the claim ratio is very, very poor, and ultimately only the insurance companies get enriched by the premium they get, and people are not aware of what kind of an insurance can they claim. This was the experience. So we departed from that kind of an approach. Our approach is that let us give a direct insurance product. It's a retail product given to a customer. The customer awareness has to be created, and then only the claim ratio will improve. So that is the reason why our schemes are different, insurance scheme. The second is pension scheme. There was a micro pension scheme called Swavlamban earlier. How is Atal Pension Yojana different from that? Look, in the Swavlamban scheme, we used to tell them that look here, if you contribute any amount between rupees 1,000 to 12,000 per annum, you can be covered under micro insurance scheme, and we will invest this money in your name in the corpus, and whatever is the return on the corpus, depending on how much was your contribution and what was the return earned on the corpus by PFRDA, you will start getting pension at the age of 60. And the poor people asked us, okay, please tell me how much pension I'll get after 60 years. We said, no, we don't know. It will depend on, if you get 8%, you will get this much. If the return is 7%, you will get this much. If the return is 6.5%, he was totally confused. He didn't know whether to participate or not. He says, no, I am not interested. You are telling me to give monthly contribution now, but you are not making any assurance ki how much pension I will get. I am not interested. This is the way he used to say. So now this is a defined benefit pension scheme. Atal Pension Yojana, we are saying that government is guaranteeing minimum 8% return on the corpus that is invested. If by chance the corpus invested doesn't bring return of 8%, the government will chip in. And if the return is high, the benefit will be more. So we are saying a minimum 5,000 rupees pension you will get, minimum 4,000, minimum 3,000. There are 5 slabs. But if the return on the corpus over a life of the corpus is more, you might get 6,000 rupees, 7,000 rupees as pension also. So upside he gets, downside government takes, and that's how it becomes a defined benefit pension scheme, which is clearly understood by a poor person, and it will be easy for him to make a judgment now whether he should join the scheme or not. In addition, we are also giving the benefit of co-contribution by the government. If the person himself decides to join Atal Pension Yojana before 31st of December this year, then government will give him 50% of his contribution or rupees 1,000, whichever is lower, as contribution in his account. So to that extent, for 5 years, the government will give him the support. 50% or 1,000, whichever is lower, he will get as co-contribution from government. This is another benefit in Atal Pension Yojana.
Thank you so much. One thought keeps coming. Most of these schemes are for people who are still young, but there are nearly 11 crore people who are much old, much above 60 years. About 3 crore of these people do earn some pension, civil services or old age or widow or under the below poverty line. Is the government thinking something for the existing elderly to provide them some financial support through insurance?
We are aware of this need for some kind of a very good insurance product for our senior citizens. India is a country which respects its elders, and we do know how difficult it is for old people to undergo some medical treatment, particularly if the family is not doing well economically. So the government is thinking on those lines, and in the series of social security measures which we have taken, we might come out with one more product which will take care of this.
My suggestion would be something like a universal old age pension, but I leave it to you. One more thought that comes, and this is more from the yoga day that was recently observed. Now most of the most of the insurance is sickness oriented, but yoga ensures wellness and health. And I was wondering, once we have introduced yoga and we have seen the success of the yoga and we know the merits of yoga, would there be a thought of having a wellness insurance whereby the insurance not only covers the sickness and medicines, but also ensures that people get into a practice of keeping themselves fit? Maybe subscription to a fitness center, maybe subscription to a yoga center would probably become part of a wellness insurance, and maybe that will be a concept make in India. Now I know we are running out of time, but I had one more question to ask you, and this was regarding the Mudra. We wanted to know, Mudra scheme has been launched. What would be the rationale and objective behind the Mudra scheme? I understand it is basically targeted for micro and small units. Would you like to share your thoughts as a policy maker on Mudra scheme?
Well, basically Mudra is a concept. Mudra stands for provision of credit requirements to those people who are in non-agriculture sector, in small businesses, in small industries, handicraft, handloom, whose requirement of credit is below 10 lakhs, whether it is a working capital requirement or a requirement to have some assets created for the purpose of doing their business. So any loan below 10 lakhs is Mudra loan. We are trying to attack it in two ways. The smaller loans are best given by microfinance institutions in this country. We have seen that there are so many microfinance institutions which are doing a good job. The recovery rate is also 100%. The ease of doing business, ease of getting credit from a microfinance institution is much better. They go to each one's house, give loan, recover it, and that is fantastic. But the question is that the microfinance sector in India is not developed. Through the medium of Mudra Bank will not only be a bank of refinance, but it will also be a policy bank for microfinance sector. And we would like to bring in the features of regulating, registering microfinance sector in the Mudra bill, because Mudra Bank will become a bank only when we pass a bill in the parliament. So that bill will contain certain provisions of microfinance sector. So by intervening in the development of microfinance sector, by direct intervention in terms of refinancing, the interest rate which is charged by microfinance institutions should come down in the market. By giving a guarantee to microfinance institution also, the interest rate should come down. So the entire intervention of Mudra Bank will be number one to develop the microfinance sector, number two to bring down the interest rate in the microfinance sector. Apart from that, the commercial banks are also doing a lot. And last year, all the banks put together gave about 50,000 crore of loans to such units whose requirements were less than 10 lakh rupees. We have tried to expand this target this year. We have told the banks that let us give 1 lakh crore this year to this microfinance units so that they don't remain starved of funds, and they are better served by giving them credit from an institution. So that also will make a major difference to these people. So we do hope that in urban area, in rural area, the thelawalas, the dhobis, the barbers, all this category of people, they'll be able to draw some money from banks.
We must thank you for your time. This has been a very educative session. My students are really going to benefit, and I'm sure we have benefited a lot knowing what is the thinking in the mind of the policymaker when these schemes are being formed. I now understand we in India are really a welfare oriented nation, and the government is taking care of the welfare of its citizens. We thank you very much once again.
Welcome.